In this video, we will look at the current valuation of Google, Facebook, Microsoft, and Apple. Nasdaq is down close to 30% year to date. And in this video, we will look if these big tech stocks are a good buy today at this price level. First, we will use free cash flow yield as a valuation metric. And secondly, we will use discounted earnings per share method. And then we will take the average for both methods. So let's get started. First of all, if you are not subscribed to the channel, you can do this by pressing the subscribe button under the video. You will not miss a single new video. Okay, big tech stocks are down significantly from year to date. And for me, it was really interesting to see what kind of valuation they currently have. Are they a good buy at this price level? So we will compare the valuation for Google, Apple, Microsoft, and Facebook. Okay, the first method that we will use is free cash flow yield. This method is used by Terry Smith, famous British investor that I follow. The yield shows us how much free cash flow is generated compared to the company's market cap. We are using next 12-month free cash flow yield divided by current market cap. Okay, on this chart we can see the free cash flow yield of Google. Right now the yield is 5.3 and the average for the last 3 years was 3.79. So as we can see, compared to its own history, we can see that Google is trading above its average yield. So the higher is the number, the cheaper is the company compared to its own history, and the more return we can expect over the years. Now we will add Apple, Microsoft, and Facebook to this chart. Facebook has current free cash flow yield of 4.6, Microsoft 3.7, and Apple of 4.2. So Google has the highest free cash flow yield among the group. So Google looks much cheaper compared to its own history for the last 3 years and compared to its competitors. I have compiled all the data to the table. We take the difference from the last or current free cash flow yield compared to its average. We get the upside. We multiply this upside to the current price and we get the fair value. So I have calculated the fair value for all companies. For Google, the fair value is 3,100. For Meta is 239. For Microsoft, it's 292. And for Apple, it's 134. So the highest upside is for Google or Alphabet. And according to this metric, Apple is trading around its fair value, around 3% overvalued. Okay, now let's use another method. We will use discounted earnings per share method. A similar system is used by Phil Towns. What we basically do is we take current earnings per share, grow them using the growth rate, multiply by future price to earnings, and discount them back to today using the required rate of return of 10%. After adjusting for net debt, we get the fair value. Here I'm using the price to earnings as double the growth rate. The same technique is used by Phil Towns. In the example of Google, I use the growth rate of 14%, which is on the low end that analysts are projecting for the growth rate to be for the next 5 years for Google. I use the price to earnings of 28. As a result, we get the fair value of Google of close to $3,860 per share. This is net debt adjusted fair value. We are building a tool that will help us to determine the fair value of the stock very quickly. The data is downloaded automatically. You can easily adjust the growth rate if you think the growth rate will be lower or higher. For example, if we use the growth rate of 15% and the price to earnings of 30, we get the much higher fair value of Google's stock. Okay, I have added this data to the table. Again, for Google, the upside is the largest among the 4 big tech companies. The upside is close to 75%. If we compare that to Apple, which is, according to this metric, around 15% overvalued. If we would take the average of both methods, we get the fair value of Google of close to $3,500 per share. For Facebook or Meta stock, it is $238. For Microsoft, it is $307. And for Apple, it is $126. So the highest upside potential is for Google. I was really surprised that Google offers such a huge upside potential. All companies are different in many ways, but according to this metric, Google offers the highest upside potential. Even if we use the lower growth rate for Google, it still offers the highest upside. Also, I have made a video if Google can spin off its YouTube business. Here's the video. If you are not subscribed to the channel, you can do this by pressing the subscribe button right here. You will not miss a single new video. Thank you very much for watching till the end, and see you in the next video.